Great. So I've given you guys introductions, necessary stuff that you need to know. If you ever have any questions, please do stop me and ask. I do talk a lot. Do stop me and ask. Today, the idea of the whole seminar today is for us to talk about the ideology, where it comes from, how it evolved, how I drafted everything that I teach, how it's structured, how I want it, how I do it, how I expect, what I expect, and what you guys should expect. That's all about today. That's all I'm expecting. Nothing new, nothing strange, right? I do not trade like everyone else. I do not trade like everyone else. I trade like me, my personal ideology. I did not make this ideology out of my own, but I have studied from different mentors, professionals. I can call them that because they taught me. I studied from professionals. Then after a specific time of study, I managed to come up with my own ideology of looking at the market and building consistency out of it. What is Forex to me? It's an act of seeing specific things or specific events every time. Most of the time, you see them so that the next time you see them, you're going to be sensitive to the particular information. So I'm talking about consistency here. You see a certain pattern, you master it. That's all that we're gonna do. We're not gonna do anything strange. We're not gonna do anything out of this world. We're just gonna master a simple something, a very simple something. We're going to look into it. We're going to master it. We're going to build consistency. We're gonna backtest it until we get tired, so that the next time we see it happening in real time, we get very sensitive to the information, we kill it. I don't promise people money. I don't promise people making it big after this course, but I do promise people results. I'm a man of my word. I do promise people results, that your trading life is never going to be the same again. And I always try to provide my best. So let's look into things the way they should be. The market is structured into different categories, just like in real life. Life is unfair. The Forex market is unfair too. It is designed for you and me to lose money for the sake of the market makers, because it's business. Who is the market maker? We have people who buy and sell. That's us, retail traders. Then we have liquidity providers, those who set prices, those who set conditions for the buying and selling. So what I want is for price to get high, and you buy when price is high, and prices to get low, and you sell when prices are low. This is how they profit. So in short, in simple terms, I'm trying to say, the market makers profit for each time that you lose. So their personal ideology of the market is for you to lose. That's how they profit. That's how they profit. Market maker is not a broker. Market maker is not a broker. A broker is an intermediate between you and the financial market. That's a broker. We're going to go deeper with what a market maker is all about, how it goes, how it works. And let's continue. The ideology of a market maker is to make you lose. That's the end profit. And how do they make you lose? To create a circumstance that forces you, that induces you to buy at a higher price and to sell at a lower price. That's how they make profit. So for each time that you lose, it's a market maker gaining. Now let's look at the reality of Forex. The reality of Forex states that 70% of people who actually join Forex, we are talking about retailers. These are the guys that we call them people. They lose money. Meaning to say the market maker business is really large. So if 70% of people who actually make it into Forex, not make it in Forex, just making it into, joining the thing, they lose money. And from the 30% that remains, 25% give up. right? So it means that the market makers have an edge in the market. These guys we call the market makers, they have an edge in the market. I'm giving you guys an ideology so that you know why we follow these guys, right? Why we follow these guys, because I cannot teach something that does not have an ideology behind it. I'm gonna explain to you how things work, why we trade this way, why I look into the market the way I do. So let's get started. The market makers have an edge in the market because they make almost 99.9% of the gains in the market. So because they make 99.9% of the gains in the market, it means we cannot beat this. And I learned from my childhood that if you can beat something, then you join it. So we're going to be joining the 99.9. These guys are liquidity providers. Liquidity, new word. The word liquidity simply means money. Simple definition, English. The word liquidity means money. So whenever I say liquidity, subconsciously you can translate it into money. These guys are the money providers. They're the liquidity providers. They're the liquidity setters. They are the price setters. These guys are the ones who make prices. These guys are the ones who move the market. What's there about this statement that gives us an advantage is that we can follow these guys because they live places. They live like footsteps of how things are going. They live like footsteps. They live like prints of how things are going to be working in the market. And using such prints of provision, using such footsteps of liquidity providing session, we're going to come up with an ideology, a nicely set up ideology that we're going to be very sensitive to, and we're going to build consistency out of. So this is just a simple sketch that I drew on the screen, but I call this simple sketch the signature pattern. I'm going to explain it. These signature patterns explain how market makers make money and why we lose money. I talk a lot about losing, not in the name of threat, but in the name of understanding. They make money using the signature pattern to capitalize, to monopolize our involvement in the market. Thus, they win as we lose. We lose more than we win because of the signature pattern. And I'm going to explain how it works right. This is where the war ideology is based. So let's assume this is the beginning of a period. Period, new word. A period could be a day, a year, a month, a week, 4-hour period, 1-hour period, 5-minute period. But let's talk about a daily period, 1 day. We see the market opening a day in form of a ranging market. By the way, a ranging market is when price is ranging within a specific area, right? It's just ranging within that area. So we see market price ranging within an area, bounce above, bounce below, bounce above, bounce below, bounce above again, bounce below, and so forth. And how do we interpret this from baby peeps? As retail traders, we were taught that this is what we call support and resistance, which is actually not a big lie, but I don't believe in it. The fact that one person doesn't believe in it doesn't make it irrelevant. The people making money from support and resistance, but I'm not making money from support and resistance. So we are trained to buy at support zones and sell at resistant areas. Thus, the market maker opens a period with psychological zones of support and resistance. Why do we call it psychological? Because the market maker is going to give us an illusion of something that is actually not there, support and resistance that is actually not there. So they're going to open a day or open a period. In this case, we're giving a period as an example of a day. Going to open a day in some form of support and resistance, and support and resistance, and support and resistance. And what are they going to do? They're going to accumulate buy orders from the support zone and sell orders from the resistance zone, and they break out of it. So, because they accumulated buying orders from the support area and selling orders from the resistance area, this whole session of the beginning of a period where we have psychological support and resistance, we call it the accumulation. Are we together, guys? In the chart. Y in N. Are we still together? Great. 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 I see responses from the chat. Great. So, the psychological support and resistance that they bring upon as the period begins is what we refer to as accumulation. Why do we call it accumulation? Because these guys are accumulating buying orders and buying orders at all zones of support and selling orders at all zones of resistance. Trapping traders to see something that is not there. Illusion. Total illusion. We're going to be talking more about this. So I understand there are a lot of questions concerning these things, but we have a long way, very long way. When they accumulate orders, now that they are full of buying and selling orders that are accumulated within this range, we're going to break out, trapping who we call breakout traders. Now, if we go to baby pips, right, I'm sure we learned that, I also learned that actually, when we have a zone of support and resistance, when we have a beautiful zone of support and resistance, it resists there, it supports there, it resists there, breaks out. We learned that when the market breaks a certain structure, it means it has changed direction. So what do we wait for? Wait for, retest, and sell. These ideologies are well known. If it was this easy, where I just come and draw lines like this, then I wait for it to break and it retest, then I sell, then it starts going down. If it was this easy, I would have been a millionaire when I was still 5. I would have been a millionaire at 5. But things don't work like that. Things don't work like that. They break out deliberately from the accumulation phase and give a very strong momentum, a very strong movement, a breakout movement from the accumulation phase. And that movement is called the manipulation phase. Why do we call it the manipulation phase? Because it's a fake movement. Right. It's not easy to write with the mouse, guys. Right. It's the manipulation phase. Now, why do we call it the manipulation? Because it's a very strong momentum that enforces traders to take the wrong direction. It's gonna enforce traders to take the wrong direction using momentum and pushes, momentum and volume. We're gonna explain these new words. New words, momentum, volume. What is momentum? Power, right? Momentum means power. What is volume? Volume is as good as saying liquidity. So volume is money. Okay. Right. So they're gonna use a lot of money and a lot of power to force the market to a wrong direction. Now, when traders see that, they start picking up selling orders, right? Selling orders. Now, as they do that, the market, when it's full of wrong orders, that's when they start making money. Why? Because the price is low and retail traders are being forced to sell. Which takes us back to what? The ideology, right? Of market makers forcing traders to sell at very low prices and forcing traders to buy very high prices. This is how they profit. And it's actually not unfair. It's very fair. Why? Because it's business. I'll do anything for money, my business. I'll use a lot of strategies, marketing, employing great staff, improving quality, value for the sake of business. Now, this is how they do business. Tricks, using manipulation, yes. That's how money is lost, and that's how money is made. Positive thinking. Let's continue. After the manipulation phase, we go to the next phase, which is called, oh, by the way, did we understand the manipulation phase before I go on to the next? Are we together until now?
Yes, we are together.
Great. If you do not have a microphone, you can always use the chat to type Y for yes and N for no. If you type N, one person types N, we're going to repeat that point over and over again until the same person types Y. It's not about rushing the course and understanding everything. It's about making sure that everyone understands everything. Great. Perfect. I see positive thinking in the chat. Great. Now, from the manipulation first, there comes what we call stop hunt. The most important phase in trading. It's called the stop hunt. Now, this is the most important phase in trading. Why? Because my mentor told me something that I can never forget. Who's my mentor? I won't say now. My mentor told me that, Louis, never ever pick a trade before you see stop hunt. Never. I mean, never. What is stop hunt? Stop hunt is an act of hunting down all the stops that are within a specific region. What are stops? New word. Now we have three types of stops. We have stop losses. Bless you. Stop losses. We have buy stops. We have sell stops. These are the three types of stops that we're gonna go deeper into this when you speak of liquidity, run, stop hunt. But for the sake of today, so that I don't create confusion out of an NTU, a stop hunt can be, I didn't say is, please get me right, I was once in trouble because of this. A stop hunt can be in a form of a W. I know you guys trained your eyes to see a W, then you buy. Trained your eyes to see an M, then you sell. Now let's explain this in detail. When we see a W, we have a low right there. So because we have a low right there, it means if someone is buying right, they have their stop losses underneath this low, and it's going to be taken out. So the act of taking out lows and highs is what we call stop. The act of taking out lows and highs is what we call stop. 1. 2. Let's talk of buy stops. If it breaks out of this resistance area, right, we believe that if price hits rebound resistance, so if it breaks out, there are buy stops that lie above this high right there. There are people who believe that if it breaks this point, it's going to be going up. So if it takes out that region right there and start dropping, that's in stop hunt. This is where accounts blow. So if you trade without witnessing stop hunt, then your account is definitely, there are 99.9 chances that your account is going to blow. It's definitely going to blow, in fact. 100% chances, I assure you. The same applies right here. People believe, by people I mean retailers, you and me. So people believe that if it breaks out of this region right here, they set sell stops so that the market goes down with them. So what's the market gonna do? The market maker is gonna come down to activate all the sell stops that we did this region, then start reversing. So what have you done? You have been induced or have been enforced to sell at very low prices. Then market goes trades up. That's what. Is that unfair? No, it's not unfair. What is it? It's business. So what are we going to be doing? What's my ideology? My name is Louis, and I follow the business model of trading. So what's the business model of trading? I cannot beat the market maker because the liquidity that I have, all the accounts that I have, even if I joined from the first day I started trading, they are not even to a quarter of what a market maker can do with the people. I mean the money. So instead of me trying to beat them, because I can't, I'm simply going to join them. That's the only thing that I'm going to do, join them. We have a question in the chat. Welcome. Please do ask. Okay. I will wait for the question. Let us go further. You can be typing the question in the chat if you don't have a microphone. So the whole ideology of how I run things is to follow the business model. I cannot beat the market makers. I cannot trade more than them. So because I know I have acquired specific knowledge of how they do things, what I can do is follow. I cannot make as much as they make, but I can follow and take what they leave. The fact that the market makers make money when we lose does not mean that they lose money when we win. Life is unfair. Why is life unfair? Business. The question?
Yes, hello, coach. Can you hear me?
Yes, I can.
Sorry, to found the stop hand, it means that in all trading, while I'm doing my analysis, it's a must for me to mark the support and resistance. So only, no?
No.
Okay,
By the way, we won't even mark support and resistance. Well, we'll see it, but we won't use it. So now it's a matter of patience now. You allow me to go with you my 15 days, you will see that you don't need support and resistance. And you never needed it in the first place. You wish you never knew it. Great, 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 great if you ask. So that's my whole ideology of looking into things. That's my whole ideology of looking into things. So what I was talking about is the model. So everything that happens down here is what we call now the stop hand. The most important thing about the stop hand, excuse me. The most important thing about the stop hand is that this area, this phase of the signature pattern is where we get our entry. Because we are saying you cannot pick up an entry before you see stops being taken out. The phrase stops being taken out simply means liquidity being grabbed. So stop hand can be also known as liquidity grab. So you cannot take entry before you see stop hand. You cannot take a trade before you see liquidity being taken out. Now, what do we mean by that? We mean around the stop hand area. This is where your entry is. Where is your entry? To the opposite direction of the current events. The opposite direction of the current event. So we don't trade with the wind, right? We trade with the drive. Are we okay? Are that statements of we don't trade with the wind, we trade with the drive? I heard it when I was still young, 5 years old, I think 7, that whenever my daddy was driving, going forward, the wind would go back. So we don't trade with the wind, we trade with the drive. That's it. We trade the opposite direction of the current event. That's how things go. This method is super controversial. It's scary. But I'm telling you, if you master everything that I talk about with a calm mind, neutral mentality, this is gonna build you consistency that you ever need. You thank me later. Let's look at the very same scenario on a selling model. So we have a period. We have a period, right? Beginning. Now it's a period. It depends, right? But in this case, what I'm referring to as a period is just 1 day. Okay. Period is best, it depends on how you measure it. Now you can measure a 1 hour period, 5-minute range, a weekly period, or a monthly period, a 4-hour range. It all depends. And we're going to learn when we go into strategy, because we are not learning a strategy. I'm not teaching you guys a strategy. I'm teaching you a methodology. Right? When we go into the strategy now, we're going to know which period we look at, how we look into it, how we divide things, and so forth. Give me my 15 days. Now, the period of a day begins right there. We have daily open, right? Now, since we have daily open, we see the market opening a day in some form of psychological support and resistance. By the way, why do I call this psychological support and resistance? Because they are to tickle around with your psychology to force you to buy support zones and force you to sell resistance areas. And when that happens, what do we call it? Accumulation. Call that accumulation. Why do we call it accumulation? Because I need to put this on silent. Great. Okay, accumulation. Why? Because we have a lot of orders accumulated down here, right? It support, sell, it resistance. And when that happens, market is going to break out of that accumulation phase. Then it's going to partake in what they call manipulation range. Manipulation, what is manipulation? It's a movement that they do, that they use to force, to enforce, or to manipulate traders to take wrong direction. And what do they use? They use two things: volume, momentum. Volume means money, liquidity. Momentum is power. Momentum means power, right? So using money and power, they're gonna cause a false movement to the wrong direction, leading to what? Stop hand. Now, what's a stop hand? The act of stops being cleared. The act of buying orders or selling orders, sell stops, buy stops being activated. Then market trades opposite. Now the rules are, the first rule is we won't pick up a trade until we see the stop. We won't pick up a trade until we see the stop. Now, the last thing, I want to show you something really interesting. Really interesting. I'm going to divide my page. Let's divide a page into 4. Guys, these lines are very straight. These lines are not straight to you. I won't say. Right. We see market. I want to show you something that you see every day. Every day you see this. Every day you see this. But my people will be reach to the level. Guys, if you don't stop me to ask questions, I'm gonna keep talking like this and you won't understand anything. This is very serious. Pardon? So every driver, accumulation, regulation, subpoint, and the expansion. Right. So this is a bullish model. I have a question in the chat. Do we have a question in the chat? I didn't understand the previous message. Please get it right. I want to do the same this side right here. The bearishness. We only spoke about accumulation, manipulation, and stop hand. We're still going to talk about distribution and expansion. So keep calm, guys. Guys, give me my 15. So we have it again, accumulation right there, manipulation, stop hand. Then basically we have it's not easy to draw with a mouse. Here. Right. So what we have right there, we have a buying model, a bullish model, accumulation, manipulation, distribution. I mean, of accumulation, manipulation, and expansion. By the way, what I'm calling expansion right here is the daily trend, right? The daily trend. That's what I'm calling expansion, right? This actual movement of the day is what I'm calling expansion, right? So this is a bullish model and this is a bearish model. So let's assume that this is a period which begins here and ends right here for the whole day. And it's on a 15-minute time frame, right? It's on a 15-minute chart. Let's assume, right? It's on a 15-minute chart, right? It's a period of a day when it's illustrated on a 15-minute chart, and it starts right here and it ends right there, right? Let us look at something that we see every day, but we never pay attention to: the daily candles. If the 15-minute time frame looks like this, it means the daily candle looks like this. Here's the daily candle looks like this. Why does the daily candle look like this? Because this region of accumulation, right, is the price opening, right? And when price manipulates to the downside like this area right there. When price manipulates to the downside like this area right there. And when price expands, right, like this, is this expansion range, right? Give me some blue color. This expansion range, right? And lately we have market maker pulling out, which is reversal. Why we prepare for the accumulation of the XP? The same applies in a bearish momentum. So we have red candle illustrating going down. It's going to be looking like this, where the area of accumulation right there, it's going to be the price open. Then we have manipulation right there, which belongs to this wick right there. Okay, pardon me, my network had misbehaved for a while. I'm sure you all can hear nicely. You see my screen nicely. Okay, so this manipulation belongs to this area right here. So this is a period of 1 day on a daily time frame. So this is a daily time frame. The difference between a daily time frame and a 15-minute time frame is that these are 66 and 15 candles which illustrate 1 day, and this is just one candle which illustrates 1 day. So it means there is no difference. In this region right here, expansion is going to be this daily trend right. We always see this. We always see this. And for this week right here, it's going to be the distribution phase of the market, taking out what is preparing for the accumulation for the next day. So, with everything, the ideology is based on seeing a bullish candle or a bullish day opening. Seeing a bullish day opening like this, right there, manipulating to the downside and participating in a stop hunt so that we buy or we look for a region to buy within this range or below the opening of the day. That's the whole ideology. This is all we're going to believe. The same applies with bearishness. The whole ideology is based on seeing bearish candle opening above, bearish candles opening above, then trades above in form of manipulation. Then we look for opportunity to sell anywhere around or above the opening of the day. Why? Because of the business model. We buy low and we sell high. So when prices are very low, we buy, we don't sell. Prices are very high, we sell. We don't buy. Did we understand everything that I said? Do we understand everything that I said? Did we understand everything that I said today? In the chat? Oh, there is a question here. So we must use the daily candle for this. Yes. You must use the daily candle to see. Everything that I'm teaching until now is not for you to try to do anything in a real account and a demo account. It's just for you to see, to witness, because I teach based on sensitivity. My strategy is sensitivity. You become very sensitive to information that you see every day, so that when you see it the next time, you keep it. That's my strategy. So everything that I'm teaching you right now, Dumiso, is for you to see. It's not for you to do anything. It's not for you to pick up buy trades. It's not for you to see the day open and trades low, then you buy. No, it's just for you to see it happen. How do you know that price is high or low? That's the whole idea of everything. That's the whole idea of everything. How? That's the whole idea of everything. As the last thing, I'm gonna give you guys homework. Homework is a must. Homework is a must. It's a must. So what I'm seeing right there is I see a series of daily candles. By the way, I trade VIX because I like it. Because it's fast, because it pays a lot of money, it pays bills. It's just fast and it's really nice the way it moves. I can go like I can hold a trade from this point right there all the way down, and it just makes a lot of money. It's really fun like that. It is not affected by fundamentals. Nothing moves it. You can trade comfortably. However, there are demerits. You can trade on weekends too if you're a busy person like myself. You can trade on weekends too. That's why I trade VIX for now. Further reasons I'm going to give you as the courses go. So what I see right is a series of daily candles. So I'm going to focus on this bullishness right. And if I look at this bullishness right here, I see price opening, trades low, then expands up. Price opens again, trades low, then it expands up. Price opens right here again, trades low, then it expands up. This information is for you to see. Look at the bearishness right there. moving away from the bullishness to the bearishness. I see price opening right there, trades high, then it expands low. Opening right there, trades high, then it expands low. Opening right there, trades higher, then it expands down there. Again today, opening right there, trades high, and it expands down. Are we together? If I mark my days, if I separate my days in periods like this, right? I'm just marking the period of each day using blue, horizontal, vertical. How do you know that it's horizontal? Vertical? Horizontal goes up or down? I don't know. I think horizontal goes from left to right. But it's horizontal or vertical. Let's look into it. Let's look into it. Vertical goes down. Wow. I got that. I got that. I'll never forget that again. Never. So we look at it, right? Market price opens right there, right? Market price opens right at this price right there. This is where it opens, right here. It starts a period and it trades high. Why is it trading high? Why is it trading above? To force, to induce, right? All those conditions that we spoke of, to induce all those conditions that we spoke of. Opens right here. Why is it trading down when you know that it's going to expand to the downside? To force you guys, me too, to lose. Right. We see another day. A day opens right there. Price trades down in expansion for the previous period. Right. Then market opens in accumulation. Now, what kind of accumulation do we have right there? We have market participating in some form of psychology. Simple stuff, guys. Price bounce there, bounce below, bounce again, bounce below. Okay. Let me make it smaller, make it clear support and the resistance. Bounce above, bounce below, bounce above, bounce below, bounce above, drops down, and it breaks out of that region. Now, when it breaks out, look at the candles that it uses to break out. Fully grown candles, momentum and volume, fully grown candles. Then from there, I have stop hunt. But this information is not for you to worry about it right now because we're going to study this for all the days of our lives. Right? But don't worry about this now. I just want you to see. This information is for you to see. You see market price bouncing up, bouncing down, bouncing up, bouncing down, bouncing up, bouncing down. Then it breaks out of that region. It breaks out of that region. We witness stop hunt. How do you know that it's stop hunt? Good question. You see M or W. For the time being, this is not the final. For the sake of now in this class, the first day, you just want to see a beautiful M or a beautiful W, then you see expansion. Now, this is a beautiful bearish day. A beautiful bearish day. And if you look at the daily structure of this specific period, the daily candle of this period, you would see that it's a bearish candle that looks something like this. Looks exactly like this. Why? Because price opens, form of accumulation, then trades high, which is this mark right there. Then it expands to the downside, which is all this expansion, all the way to the low, then it starts trading higher. Are we together, guys? Are we together until now? Are we? Is it sound? Great. Now, as a matter of homework, I want you to see this, to identify this. Don't do anything. Don't try to do anything that is out of this world, that is out of these lectures. I understand most of us do know some things. Some of my students before, you are very much aware of this, but don't push it too forward. Don't take it too fast. Just see this, witness this. If you find it interesting, screenshot it and send it to the channel. When I see it, I'm going to be very interactive. the channel for the next 15 minutes. Just see it. See it. If you find it interesting, take a screenshot, take a photo, and send it to the channel. I'm going to say something about it. That's your homework. See this information, become very sensitive to this information. I've given you a bearish example right there. You are going to do the deeds to get a bullish example. There are many bullish pays. I don't know, boom always goes up, spikes up. It's not just about VIX. You can also do this on Forex. Euro, USD, NASDAQ, Bitcoin, regardless that I don't trade those assets. Are we together, guys? So with that being said, this was a beautiful hour of understanding. I'm going to stop the recording right here. And Zoom takes like 30 minutes to 45 minutes to edit the recording, the video, before they send me the final link. So stay tuned for the recording.